I'm recording. Okay, so we are recording now. Okay, so let's start with the lesson of today. Again, we're just going to break down last week's setup, which was an amazing setup, a prime example of my strategy. Yeah, just working out, just how it plays out and so on. So, like always, like every time we do a live lesson, let's start off by taking down the confluences with your help. Wait, let me just... Okay, let's start breaking down the confluences with your help. Come on, what's the first confluence we're looking for? Market structure, well done. Second confluence. Fibonacci, well done. Third confluence. Supply and demand, nice. I love how everyone knows their stuff, so well done. Fourth confluence. Liquidity, well done. I see everyone is answering before I have time to name it, so well done. Extra confluences, the order doesn't matter here. Imbalance, yes. Session liquidity. Volume or point of control, yes sir. And the last one, which is one that we have on this trade we took. Which is entry models, well done. Entry models, so very basic stuff, okay, very basic stuff. Like always, this is what I use to make money in the markets. This is all I use to make money in the markets. Literally, this is my cheat code. This is everything I use, everything I apply, everything I trade when looking for trades, okay? When approaching the market, when aiming to make any money from the market. So firstly, like always, market structure. Let's just breaking down. This is exactly my modus operandi when I came into the charts last week, okay? And this is how fast it is to identify trades with my setups, with my confluences, with my strategy. So we start off by market structure. Clearly, we have a break of this low right here. A break of this low indicating a bearish market structure, okay? We have a bearish market structure. As you see, price has been creating highs as well. Oops. Price has also been creating highs, but it has not been breaking them, which means price is creating lower highs and lower lows, which means we are in a bearish market structure, okay? Just have a look at it. The lows are all the time lower and the highs are also lower, which means we are on a bearish market structure, okay? So we're looking for sells. Immediately we look for sells as we are bearish. Very straightforward, very simple. Then Then also for market structure, remember, what do I also look at? So in the chat, what do I also look at when looking out for market structure? What's something I also like to see? Highs and lows, and what else? Let's see if somebody can tell me. Volume, yes. Okay, volume, yes, but I'm looking for another thing now. So as you can see, volume here, we have the break of the low, has volume, it's a good candle. So yes, that's also right, but supply and demand, no. When just exclusively looking at market structure, there's also something I want to see. Consolidation range, exactly, well done. So in this case, we have this consolidation right here. Before breaking to the downside, okay? We have this consolidation right here before breaking to the downside. Then we're going to add the next confluence, which is Fibonacci. In this case, because I am using this range right here, which price created, I am tracing my Fib from this high, okay, to this low. Okay, I'm using the high and the low from the consolidation. Remember, price also broke this to the downside. Okay, so I'm tracing my fib from the high to the low of the consolidation. Then, next, confluence, supply and demand within the consolidation. Supply and demand, sorry, within our premium area in this case, because we're looking for sales. 0.764 indicates our premium area where we want to look for our supply and demand zones based on the market structure, okay, and fib. So supply and demand zone within this area clearly is this one. Okay, so this is our supply and demand zone. Okay, in this case, a supply zone because we're looking for sales within our premium area, within our fib area. So pretty much right here we have grab the indecision candle followed by volume to the downside. So we're using this as our supply zone. Okay, basic supply and demand. Then we're going to look for liquidity. In this case, liquidity, there's not the clearest of liquidities, but we have this high right here below the zone, which is what I marked out as liquidity. Okay, in this case, we have this as liquidity. Okay, so is it clear up to now? Is it clear for you guys? So in this case, we have the four main confluences. We already have a trade to trade from on this area, as we have 1, 2, 3, 4, which are the must confluences. These are the confluences we must have before placing any entry. Easy, yes, easy, very easy. Maybe not for everyone. If you have some experience, then it must be very easy for you. So guys, I'm asking about questions on these four confluences for now. Any question you have, take it down and I will be answering questions at the end, okay? Also, if you're asking questions as to what's liquidity, it's explained multiple times in the vault. If you're asking questions about how to find the supply and demand zone, it's explained thousands of times in the vault. So yeah, make sure before asking basic questions, you also go over the lessons. So, okay, I imagine it's clear up to now. Few of you have answered, but yeah, it should be clear up to now. So we have the first four confluences. Now let's look at the next confluences, okay? So imbalance. At this point, once we have this four confluences, we're going to look to identify the next four confluences, starting off by imbalance. So we do have an imbalance. If we go into the larger time frames, like 1 hour, the imbalance is more clear. So there is, I'm not sure why my mouse is not working completely fine. So we have an imbalance right here. Then session liquidity. Session liquidity. We did have actually session liquidity, you will see now. So if we just skip forward, at this point we have, this is the Asian low, sorry, the Asian high. So we do have session liquidity as well. Okay, so in this case we have, this is Asian high, so we're looking for a sell once price takes out this high. So in this case, we have 1, 2, 3, 4, 5, 6 confluences. Now let's look at the point of control. So it's not loading on this chart. Let me just go to another one. Let's see if we had it. I think we did have it. So we did have the point of control, okay? If we just drew these confluences, sorry, where was it? If we drew these confluences, okay, on this chart, which we have the point of control, on that chart it's not available. We did have point of control. Let me just cut this back again. So up to now we have 1, 2, 3, 4, 5, 6, 7. And entry model, we also had the trend continuation entry model, which I explained it on Instagram. You have it also explained in the vault. Okay, the entry models. Okay, we also had trend continuation entry model. So on this setup right here, okay, we had 8 of 8 confluences. We had 8 of 8 confluences. Okay, this is session lick, session liquidity. We had point of control was right on this level. Point of control was right on that level. And we had the entry model of trend continuation, which is, if you remember, price is trending to the downside, it consolidates, breaks to the downside, creates internal liquidity. Okay. Template range. Okay, so this is the entry model, trend continuation entry model. If you remember, I explained it multiple times. So we also had the trend continuation entry model. So as I say, we had 8 of the 8 confluences, which means we have a great trade in front of us. Okay, means we have a great trade in front of us. That's why I shared a pending order. I was very secure. I was very sure. Okay, like always, nothing is certain. But if you have 8 of 8, that means we have a great trade to trade. So we had 8 of 8 confluences, and obviously right here could have entered somewhere here below the zone. I think we had what? We had a 24 pip stop loss, which is something like that. And our main target was the 100% of FIB. Although I'm still holding some of it. But yeah, premium setup, okay. Premium setup, and obviously this is how it played out. Tap is in, sniper entry, and then price just respected it perfectly. So is this clear, guys? Is this clear? This is a class A plus triple A, whatever setup. It's the best of the best of the best. Again, we had 8 of the 8 confluences. This is how it played out. This is literally how it played out. Clear, crystal, very clear, crystal, nice. So, very simple at the end of the day, very straightforward. This is our cheat code. We need these 4 confluences to place a trade. The more confluences we have, the better trade we have in front of us. Can I get access to the vault? You must. To get access to the vault, you must request. You have the link. Shared you the link. And then remember, this lesson will be uploaded and stored in the vault. So you will find the diagrams of the entry models in the vault. If you scroll up, You will find them, there's a picture and there's an audio explaining them. You will find all of the entry models in the vault. This is my breakdown for every day. Yes, this is what I'm looking at every single day. This is what I'm trading. Again, Tim, if you feel like I'm not answering your questions, that's because you are asking questions that are explained in the vault. As I always say, the minimum amount of work, the minimum effort you can put if you want to make it in trading is going over the lessons in the vault. Okay? If you want to, for example, understand liquidity, just go on the vault, hit Control F, and hit liquidity, and watch all of the videos on liquidity. If you want to understand Fibonacci, then go on the vault, hit Control F, and look for Fibonacci, and you will find plenty of videos explaining Fibonacci, and so on. The reason I don't explain it again is because it will be very boring for most of you that already know this, that have gone through the vault lessons. Everything is explained over there. How to place a trade there, can you explain, please? Pretty much you enter at the tip of the zone, stop loss above the zone, and then taking profits, you can either take profits following risk to reward, looking at liquidity, looking at highs and lows of liquidity, or targeting market structure, okay? Thanks for the lesson. It's made a ton of sense. You're absolutely welcome. What's my take on counter trend trading? Pretty much just I will monitor zones. If I like it, I might take the risk, but it's always best to trade following the trend. But if you take any entry, counter trend, just make sure you secure fast and you focus on lower risk rewards, focus more on a scalping opportunity. If you follow the trend, then you may hold for longer, obviously. So Milan, you have the links on Telegram. You have the links on Telegram. If it says expired link, that might be because you broke some rule or whatever. If not, the links have always been the same. And also, guys, something before I forget, something very important on this setup, okay? Something very important on this setup is that this supply zone was formed during New York opening session, okay? During New York session opening, this zone was formed. Therefore, we know it's a high volume zone. We know it's a zone with orders, so it even adds more weight onto our setup. Okay, so yeah, class A setup, very nice setup. 8 of 8 confluences, amazing entry. So yeah, very basic stuff, guys. Again, most of you are asking questions which have already been explained in the vault. Please just go over the lessons in the vault, and you will get all of your questions answered, okay? If you have any question on the setup, then ask. But if you have questions on what's liquidity, what's the point of control, what's all of this, just go over the lessons in the vault. There's no shortcuts in trading. The least amount of effort you can put into trading if you want to make it is just going over everything shared with you guys. With regards to your new online lessons, is that solely just lessons and quiz? That's all? Yes, and there's also a group chat for elite members where they can chat and send setups exclusively following my strategy, exclusively high quality setups, zero noise, just pure trading. Okay, you also get that when joining elite. So guys, calculating pips, okay, this is something you must all know. If you don't even know, don't take this personal at all, okay? This is just something I always like to say. But if you don't even know, okay, I'm not telling this personally to you, but just in general, if you don't even know how to calculate a pip or what a pip is, and you're expecting to make any money in the markets, you're still very, very far away from the point of making any money. You might get lucky or you might not, but if you don't even know how to calculate a pip or what a pip is, and you want to make money in the markets, you're still very, very far away. Okay, you still need loads of working, loads of hard work to put into trading to even consider making any money. Okay, a pip is basically a point in percentage. To keep it simple, as I only trade gold, one pip is every 10 cents. So every time price moves 10 cents, okay, that's one pip. So if price goes from 1903.2 to 1903.5, how many pips was that? From point 2 to point 5, how many pips is it in the chat? From point 2 to point 5, it's 3 pips, exactly. It's 3 pips. Okay? And let's say from 1900 to 1902, how many pips is it? 20 pips, well done. Okay, so pretty much every 10 cents is 1 pip. Oh my God, that's beginner things, exactly. And I see people answering wrong. Therefore, if you have answered wrong these basic questions, guys, you still need loads of learning to do before you even consider making any money. Okay, this is serious. Okay, this is serious. This is not a game. Trading, you can view it as a game, but at the end of the day, it might be a game, but to win in this game, you need loads of hard work. You need to be the best you can possibly be. And if you don't even know what a pip is, if you don't even know what liquidity is, if you haven't even gone over the lessons in the vault, then don't expect to make any money in the market, okay? Why is it important to know about pips? It's basic knowledge. If you know about pips, you don't need a risk management calculator because it's easy for you if you know that every one lot, it's $10 per pip, then you know how much you're risking automatically. You don't have to think about it. It's a way to measure price movements. It's simply basic knowledge you must know. Units per lot, every lot is 100,000 units. So let's say I buy one lot of gold against the US dollar. That means I'm buying $100,000 worth of gold. So guys, I will stop recording because the questions are now more generic. I will stop recording, and if you have any questions, just go ahead and ask.